In this presentation, we will add an equipment account, which is a fixed asset or depreciable asset type of account, and the beginning balance related to it. Time to administer the bookkeeping remedy of Sage 50 Cloud Accounting. Here we are in our Get Great Guitars file. We're currently in the customer and sales section. We're going to be opening up our chart of accounts once again by going to that lists drop down and going down to the chart of accounts within it. We're also going to take a look at our beginning balances. So let's take a look at those. The beginning balances over here. We're now looking at the machinery and equipment. So we have machinery and equipment at $75,000. That's a depreciable asset that we need to be putting on the book. So what we're going to do is we're going to see if we have any depreciable assets that would make sense that we can add this information to in our book. See if we can modify the account for it. If not, we'll add a new account. If so, then we might just modify the name and then enter the adjusting entry for that $75,000 to enter the beginning balance for it. So I'm going to then maximize this. We're looking down here on the assets. So we're looking at a specific type of asset account, that being the fixed assets. So we have the property and equipment. So we have property and equipment. Notice that's kind of like a pretty generic name there. Property, plants, and equipment. We might have different kind of property, plants, and equipment accounts we would want to use, such as, an automobile account, building account, equipment account. So possibly this would be kind of like a parent account type of name. Maybe we want to just name it equipment or furniture and equipment. So what did we have over here? We had equipment. So let's name it equipment. So I'm just going to double click on it, and I'm going to keep the type of account as the fixed asset type of account, and I'm going to be changing it to just equipment. Then I'm not going to be entering the beginning balances here. So I'm not going to be entering beginning balances. I'm going to do that with a journal entry. So then I'll go ahead and say save up top. So we'll save that out. I'm going to close this back out. Then I'm going to refresh the screen. So I'll refresh the screen up top and see that it has adjusted or updated for equipment there. So that looks good. Now we want to enter the beginning balance for it, which is, as you recall, that's $75,000. Now, as we think about the equipment, remember that there's another kind of thing that we have to deal with regards to the equipment, and that's going to be the calculation of the accumulated depreciation and the depreciation expense. Remember that these things you're going to need to do that on a tax basis and a book basis. So there's a couple different ways you can think about doing that. You could try to do that yourself within the system, which means you'd have to list out basically all of the assets that are going to be making up this $75,000 cost, and their individual depreciation methods and the amount that has been depreciated over time. So you would need basically the depreciation schedules. Note that typically the depreciation schedules for a bookkeeping system for the books will be different from the taxes oftentimes. So the tax return, when you do taxes, whatever tax software or tax preparer will probably have to take that information again anyways and put that information into the tax software so that they can calculate the tax depreciation. So then the question is whether or not you want to take the time to do the bookkeeping or do the adjusting entries or track the accumulated depreciation by piece of equipment in your own accounting system, or would you rather basically allow the tax preparer to do that? If they're doing it on a tax basis, oftentimes the tax software will also be able to do it on a book basis. So in other words, if we're going to imagine that the tax preparer here is going to be doing the actual adjustments or calculations of the depreciation and tracking all of the depreciation in kind of like the subledger account that would be making up this account, both on a tax basis and a bookkeeping basis, and then giving us the periodic adjusting journal entries. So therefore, we're just going to be entering the amount of the $75,000 and the related amounts when we purchase new equipment. And then we're going to make an adjusting entry at the end of the period, which we're going to imagine that we're going to be getting from the tax software, which is going to give us the detail of the types of equipment that are making this up and the depreciation related to them. Also, just a quick note that on the tax side of things, like if you're a smaller accounting or smaller company, you may just run your books on basically a tax basis, and then you can basically record the tax depreciation, but it's not ideal for matching principles. And if you have a large company, you're going to be required to have generally accepted accounting principle depreciation. Again, that means that it's going to be a separate software, a separate depreciation calculation. But the tax software can often do that as well. So you have to put it in the tax software anyways. So that's one option, that you can use the tax software and work with your tax preparer to help you with those adjusting entries. So that's what we're going to imagine doing here. Therefore, we're not going to enter all the different types of equipment that might be involved here. We're just going to enter the beginning balance of the $75,000 total. Okay, so let's go back over. We're going to do that with a journal entry. So I'm going to close this or minimize this. Let's minimize it. And then I'm going to go to the tasks drop down. We're going to go on down to the journal entry. So we're going to journal the general journal. And then we're going to be saying this is as of 01/01/20. And the account we're going to be debiting, it's going to be increased in an asset account. So we're just going to debit the asset account. It's going to be the fixed asset type of account. You can see over here, we changed the name to equipment. I'm going to say it's beginning balance in the description. And the amount was $75,000. I'm not even going to look this time because I'm totally sure it's $75,000. Pretty sure, almost positive. So then we're going to go to the other side. It's going to be going to the equity account. Once again, that being retained earnings. So let's go on down to the retained earnings. There it is. There's the retained earnings. We'll pick that one up. That's going to be the credit of the $75,000. So there we have the debit and the credit. Let's go ahead and save this, record it, and check it out on the financial statement. So I'm going to save this, and then let's close the general journal. Let's open up the financials, go into the reports and forms drop down, go on down to the financial statements. Within the financial statements, we're going to be opening up that balance sheet report. Balance sheet report, let's make it for the month of January. Try that again. All right, and then we're going to say okay. All right, and then we have our property, plants, and equipment. Notice it's in a separate subcategory, of course, because these are our depreciable assets, more of our long-term type of assets. So we're going to double-click on that just to take a look at the journal entry that was used to create it. And there's the $75,000 there. If we go into that, there is our journal entry. If we close this back out, the other side then being in, of course, the retained earnings. So the retained earnings, double-clicking on it, we can see our transactions now for the retained earnings. There's the $75,000 for the property and equipment, the equipment account. Closing this back out, we're looking good so far. Our retained earnings, again, it's going to be where we're kind of dumping everything out in, and we're basically entering all other balances from our beginning balance. Now I'm showing it as a trial balance format this time. So we did the checking account, the receivables, the inventory, the machinery and equipment, the accounts payable, credit card, notes payable. So we're looking pretty good. We're at the 85,396. 85,396 should be here. 85,396. So note we're there at this point in time. So everything is looking nice. We will be providing the trial balance so you can check your numbers every time we remember to do so, as well as a backup file so you can jump to any point within this problem. So that's going to be it for now. Let's get out of here.